Hey everybody, Josh Sigurdson, World Alternative Media here, and we are joined once again by David Moadel of Portfolio Wealth Global, and we've got some big news to cover, but first, thank you for joining us again.
Yeah, thank you, Josh. I really appreciate it. I just want to say that you have one of the most robust discussions going on in your comment section on YouTube. I enjoy engaging with your listeners and viewers, so I'm looking forward to doing this again.
Absolutely no shortage of comments there. So we are seeing major recession indicators. We've been warning of a yield curve inversion for nearly 2 years here at WAM as instability grew. And we saw the 2 and 3 invert with a 5 about 3 months ago. And now on Friday, we saw the yield on the US 10-year Treasury note dip below the yield on the 3-month paper. This is the first time since 2007 that we saw this happen. So, David, what does this mean, and how does this indicate that we are heading right into a recession?
This is big news. You're reporting on it. I'm reporting on it. You don't see the mainstream media talking about these kinds of yield inversions, which is incredible because it is such a consistent recession indicator. And people tend to focus on the 10-year and the 2-year Treasury yields. And for people who don't know, an inversion is when you get these short-dated bond yields yielding more than the long-dated ones, which is this bizarro world kind of thing that shouldn't happen. It did happen in 2007. It happened right before the dot-com bust of 2000. It happened right before 1990 when there was a recession. So that is a good indicator. But the one that you just mentioned, the 3-month and the 10-year, when those invert, I mean, think about it, the 2-year and the 10-year, at least those have the word year after them. When a 3-month bond yields more than a 10-year bond, that's a strange occurrence. And it precedes a recession time after time. There are no exceptions to this. So it's coming. It generally happens within 18 months after the signal, which was given a few days ago. And what's happened, actually, this signal came a few days ago, and it's gotten worse since then. The 10-year has just gone down. So it's just getting worse. What's going to happen? Well, recession, of course. Can we time it exactly to the month? I'm not one of those guys that's going to tell you the exact date. I will tell you to start protecting yourself, and the time to do that is now, not later.
Yeah, it's impossible to really put a date on these things. We just know that they fundamentally have to happen eventually when we see this kind of reaction. And I mean, who is buying or who's getting involved in the 10-year at all? I mean, how would you benefit from that? I mean, other than the Federal Reserve plunging into that, I really can't see why anyone would get involved in the 10-year.
Yeah, I can't imagine at this point. It's gone below 2.5%. We're never going to see the good old days of Paul Volcker ever again. Somebody with some cojones, if you will, willing to make it possible for some quote unquote risk-free yield. Now it's just yield-free risk. Personally, I think it's time to end the Fed. They've gotten so far away from the Volcker days from back when Reagan was president, and things were at least a little bit more reasonable for retirees, savers, investors. We have a report at portfoliowealthglobal.com/Fed about the need to end the Fed and whether this is going to happen soon. I believe it will happen, and we actually have a lot of details on that in the report. That's /Fed. But let me tell you, if you're investing in bonds now, what you're getting is actually negative yield, because when you subtract the forces of inflation, then you get what's called the real yield, which is what the treasuries generate for you minus the deteriorating effects of inflation. And so it's totally flat and going negative. So you're actually losing money to own bonds now. That's how the government is rewarding you with their debt notes, because that's what bonds are. Dollars are also debt notes, by the way. So if you're just holding cash, that's no good either. You got to get into something. And that's what we at portfoliowealthglobal.com, we have a newsletter on the homepage. We're going to keep bringing ways for people to do better than to just buy into government debt. It's not working for you.
Yeah, and they're really only paying off the interest on the debt, which is not an indicator that they have any, they want to pay off the debt at all, or they have any plans to. But with the major recession indicators, the everything bubble worldwide, yet a roaring stock market all the while, the Fed claims they're done raising interest rates and the dollar is dumping while gold soars. What does this say about the potential future of gold and the future of money, crypto included?
Yeah. Well, the future of money, I believe, is gold and to a certain extent cryptocurrency as well, because at least cryptocurrency or the major ones, Bitcoin, Ethereum, and so on, Cardano, those are more recession proof as well as inflation proof compared to government debt notes. A lot better than bonds and better than just buying a blue chip index such as the S&P 500, the NASDAQ, the Dow, and so on. If you're buying now, you're pretty much buying into a 10-year-old bull market. You're buying at the tail end. A lot of retail money is doing that. Sam Zell is not doing it. He's a real estate multi-billionaire. Ray Dalio is not doing it. He's doing better than most of us. World governments and central banks are not doing it. They're not buying into US debt right now. Russia, China, Turkey, India, Iran, they're all buying huge record amounts of gold. Why? Do they know something we don't? Or are they just keeping their eyes open? They're paying attention a lot better than US retail investors tend to do, who have a tendency to buy at the top and sell at the bottom. So what does it mean for gold and for silver also, which tends to move faster than gold? I believe it's huge. Gold is the anti-dollar, and so is silver. So if you get a crash of the dollar, which is in progress, Jay Powell has ensured that the dollar is being and will continue to be crushed. Just look at the dollar's price action on the day of when the FOMC announcement and the dot plot were released. That's going to continue to happen. He has let us know that you need to protect your portfolio now, and you need to get out of just being in 100% cash right now. That's not going to help you. So get out of the debt notes. Yeah, get into gold, get into alternative assets, get into silver if you want a little bit more leverage. If you want more leverage than that, get into the mining space, into gold and silver miners. We have a number of ways of doing that. We have a report called portfoliowealthglobal.com/enemy. That's /enemy. It's about the growing wealth gap and what's going to happen with this decision and how you can protect yourself right now, because you really need to start, if you want to stay away from the death of the middle class, which is in progress right now and is being induced by the Fed. He's making sure that that's happening. You want to start allocating, and I'm glad to help you. Again, people can start protecting themselves now. If they want to contact me, I can give even more information. My email address is davidmoadel@gmail.com. If you want to put that link in the description, I'll be happy to help people even further with that.
Yeah, and I know you do some great YouTube videos as well. And I wanted to ask a little bit about, there is a deficit in gold going forward, which I've always seen as a good thing. As far as scarcity goes, if you have mainstream demand and a lot of use for gold, which there is, you see value go up when that commodity gets more and more scarce. And with that said, it coincides at the same time with this so-called booming stock market. This year has been, like, as of 2019, it has been pretty good, but 2018 was a bloodbath. And I think anyone that just kept their money in just cash, ironically enough, made a lot more out of last year, or were better off last year than those who are investing in the stock market. So I wanted to ask a little bit about how long you think this can possibly go on, because there seems to be a bubble looming, and it looks like it could be a dead cat bounce. It could be on our way to new highs. But what do you think?
Yeah, I'm not one of those people who likes to give exact dates as to when it's going to end, because the market can remain irrational longer than you and I can remain solvent. And no, I didn't make up that saying. That's an old one. But it can keep going for a little while longer. We recently passed $22 trillion in debt in the United States, and that has to catch up. The fundamentals will catch up sooner or later with the stock market. As Warren Buffett said, in the short run, the stock market is a voting machine, but in the long run, it's a weighing machine. So do we have another 2 months, or do we have another 2 years? Hard to say. And this is where it gets interesting, because there's a timing issue with the next election coming up in 2020. If a recession happens before November of 2020, there could be a major political change coming up. If it comes afterwards, then maybe not. We'll see. So that's where it really gets interesting. Obviously, the Fed has positioned themselves to try to prop it up a little bit longer. It's not working as well as people would think, though. People are not buying into it as much. Those Fed prop jobs used to really pushed the markets up with force, with momentum. Now it's just kind of lukewarm. I don't think people are believing it, and a lot of it has been priced in. We all knew that the Fed, that the dot plot would be super low with all those dots. We all knew that the Fed would not raise interest rates for the next year or even the next several years. They mentioned through 2021. No more yield hikes this year, one for next year, and then zero the year after that. That's what they're projecting. I'm expecting rate cuts myself. I think they're going to throw the kitchen sink at this, do everything they can to keep it going. How long will this Ponzi scheme keep going? I don't think a whole lot longer. And you don't want to start accumulating gold, cryptocurrency type assets, silver, that kind of thing. When it started, it doesn't work like that. That's not when you get in. You start before there's blood on the streets. And so I'm making moves now, and hopefully, your listeners and watchers are doing as well.
Yeah, and we saw interest rates drop out, 5 to 5.5% between 2008 and 2012. And I think there's a lot of concern by the Fed and by the government regarding negative interest rates in the future, and this need to prop up interest rates as much as possible before or to protect themselves long term from going negative. Do you think we will see negative interest rates in the future?
I think that's an experiment that's on its way. They're already doing it in Japan. So why not? Japan has run up more debt than we have. And they're still there. They're not in a recessionary period yet. And so I'm sure the Fed is looking at that experiment thinking, okay, well, we brought it down to 1.38% in the summer of 2016. It didn't, we survived that. We did fine, so to speak. Why not push it down to zero and below? Of course, that punishes savers, retirees, 401k plans, people who have, traditional investments, the old-fashioned 60% stocks, 40% bonds. It's going to kill them. But, what do they care? Because it keeps businesses happy, it keeps the fat cats fat, keeps the elites elite. And, it gets votes. And so, it's all good as far as they're concerned. Not so good for the middle class, which is getting shrunk down to nothing. So, yeah, I think it's on its way, or at least very close to it. They're going to keep this experiment going as long as they could. But we're kind of like the proverbial frog in the boiling pot. You don't even realize you're dying until it's too late.
Yeah, it doesn't help the already massive global shortfall in pensions. And we saw negative interest rate policies push forward in Sweden as well, and they went cashless. And that brings me to my next question, actually. With serious concerns regarding the long-term prevalence of the U.S. empire, China and India are set to surpass the United States in coming years. China especially has shown itself to be incredibly coercive and technocratic with social credit scores and crazy laws. With a push towards a centrally planned cashless society in China, how real do you believe the concern is that China will be the world's reserve currency in the near future, and the impact that would have on the rest of us?
Well, that's been in progress for a while with the petro yuan. People, when I say people, I mean central banks, people around the world, governments don't want to deal with the US dollar anymore. They're sick and tired of owning debt notes. They've been dumping it. And also they want to avoid U.S. sanctions. Countries like Russia and Iran certainly do. So they don't want to be beholden to the United States anymore. And with, as I mentioned, the $22 trillion debt and growing, who can blame them? And by the way, the pace of our debt as a nation, I don't mean individual people, I mean the government, has been accelerating. It only took 11 months to get from $21 trillion in debt to $22 trillion in debt. That's less than a year. And so each new trillion is being added at a record pace. So if you go over to New York, to Manhattan, and look at that debt clock, you can't even see the numbers anymore. They're turning so fast. Who wants to own a piece of that? It's kind of like when you might buy a stock, it's because you're buying a piece of a company. When you own a lot of U.S. debt, you're owning part of a system that's going into the gutter. So people and nations across the world are dumping the dollar, dumping bonds, treasuries for a good reason. China, India, do they want to go to a cashless system? They definitely want to go into a dollarless system. And frankly, I can't blame them. Look, if people want to learn more about that, they can go to portfoliowealthglobal.com/dead, DEAD. We have a whole report on the death of the dollar and how you can do better than owning a lot of cash right now. You can get much better yield and have to deal with inflation less. It's one of the reasons I believe in cryptocurrencies. Not every cryptocurrency, okay? I don't believe in every altcoin that comes along. One idea is to go on CoinMarketCap or World Coin Index, check the top 25, or better yet, the top 10 on that list in terms of market cap. Those are the ones that'll probably have more staying power. When you invest in a lot of altcoins, and I do like certain altcoins, but if you go too far down the list there, you really are asking for, I wouldn't say trouble, but you're taking on too much risk.
Serious risk. And I mean, that's one of the interesting things about crypto is we can look back in history and see similar things like, for example, the dot-com bubble. It wasn't that all dot-com companies were bad. It was that 95% were bad and 5% were amazing. And unfortunately, the 5% that were amazing were brought down with the 95% that were bad. And we saw that at the end of 2017, highly overvalued. And now a lot of people are down on cryptocurrencies in general, and then others love all cryptocurrencies, and it just doesn't make sense. You got to pick that which is fundamentally useful going forward.
Yeah, absolutely. The fact is, okay, so Bitcoin is down 80% since the top back in December of 2017. And Bitcoin is the mothership, as they call it. Where it goes, the others tend to follow with certain, there are exceptions. But yeah, okay, so there has been a crash. Is it the worst crash we've ever had in cryptocurrency? Well, it's the longest one in terms of time, but we've had crashes of this magnitude before, and they did recover from them. This one's a little bit more drawn out because you've got regulators involved. You've got the denial of the Bitcoin ETF. It's not going to be denied forever. They're just working out the kinks, and this is a new technology. I'm glad you mentioned the dot-com bust because, yes, it wiped out a lot of those. It wiped out pets.com. Okay. It didn't wipe out Amazon, which has been around since the 1990s. It didn't wipe out Cisco. It didn't wipe out Intel, AMD, that kind of thing. So there are a lot of exciting opportunities in cryptocurrencies. Just be careful with it. Don't keep your assets anywhere except perhaps a hard wallet or a paper wallet. I recommend a hard wallet. Don't just keep it on an exchange. We all saw what happened with Quadragax. We don't need a repeat of that anytime soon. Okay, I want to keep people safe.
Yeah, people have to look at exchanges a lot like banks, but even more unsafe than a bank. And I mean, I'm glad you mentioned Amazon because I think it took 7 to 10 years. I can't remember the exact amount of time, but 7 to 10 years to recover for them. And I mean, really look at them today, not so bad. But I wanted to ask you, what is your biggest concern going through 2019 into 2020 that our audience should look out for? And with that said, what are you most excited about in that same time frame?
Yeah, well, 2019, you had a huge recovery. The first 2 days, 2 trading days of the year were terrible. Quarter 4 of 2018 was terrible for the stock market. The first bear market since the Great Recession of 2008, 2009. And now it's just been a steady climb upwards with a bad day here and there, but mostly up. So you've had the January effect on steroids, so to speak. So what kind of growth are you expecting now for the rest of the year? People think that, Warren Buffett once said, one of the worst reasons to invest in a stock today is because it went up yesterday. That's not why you get into companies. That's not why you get into any investment. And so my greatest concern is people are going to jump into the trade now. They're going to jump on the bandwagon because they see green all across the board. That's not why you get into something. If anything, I'm a contrarian. I get into something because it's a great company or commodity or cryptocurrency or whatever, and everybody else is beating up on it for no good reason. That's why we do so much research at Portfolio Wealth Global, because we want to bring that information to the people. We don't want people to get in. We don't want anybody to be the last person to the party because all the pizza's gone, the beer's gone. It's no fun, right? So be the first person to the party. Get into those gold and silver mining stocks. It's carefully chosen right now because I believe that gold and silver are on the cusp of a new bull market. If you want to get into those cryptocurrencies, carefully selected, if you believe in the blockchain and the technology behind it, I certainly do. Get into, certain stocks, but don't just buy the whole index because then you're buying the good and the bad and the ugly. And there's a lot more ugly now than usual.
Well, I really appreciate the work that you do, and I know that you're a wealth of information, and I have to giggle a little bit. I've checked out your YouTube channel on multiple occasions, saw a lot of your videos, and I have to kind of enjoy the pretty ladies in the thumbnails. That's always fun. But yeah, that's one way to market it anyway. But can you tell our viewers where they can find more of your work and support the work that you do and the work at Portfolio Wealth Global?
Absolutely. And thank you for enjoying my videos and the thumbnails. Hey, you got to get people in the door, right? As long as the content is good. I figure it's all good, right? But yeah, okay. So my name's David Moadel. And if people want to email me for more information, davidmoadel@gmail.com. Head on over to portfoliowealthglobal.com, sign up for that newsletter. You'll get the latest research. It's not just me, it's a whole research team, even though I'm one of the researchers there. If people want to learn a lot more, I recommend they go to portfoliowealthglobal.com/rich books, RICHBOOKS. We've got a list of wealth building books that are essential. These are the classics. And, you know, a lot of people, not a lot of people actually read books anymore about investing. They just want to go to you know, a few YouTube videos and they think they're an expert now. It doesn't work like that. So you got to self-educate. That's why Josh and World Alternative Media is out there to give you an alternative to the mainstream media and the lies and the criminal activity that they've got going on over there. So by the way, subscribe to World Alternative Media if you haven't done that already. And come check out Portfolio Wealth Global. I think you're going to find a lot of resources there.
Yeah, you pointed out something that is very true. I remember during the crypto bull run, I saw so many 16-year-olds that made a few dollars in crypto suddenly doing videos giving advice on how to trade crypto. They're all gone now, but nonetheless, yeah, I mean, all of us, we spent a long time taking in this information, reading books, learning about these subjects before we had the nerve to go in front of a camera and talk about them, that's for sure. So I really appreciate the amount of information that you've been able to compile over so many years and bringing that all together for the audience to understand and benefit from. So I appreciate you once again joining us, and we hope to talk with you again soon.
Thanks a lot. And everybody leave comments below. I will respond to them. Thanks a lot, Josh. Appreciate it.
Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.